Alrighty, traders. This is Blake Morrow. You are listening to listening to the Morning Edge. Just making sure everybody's here. Just looking around really quick. Okay, market's going to be opening here in just a few minutes. I was just kind of taking a quick look around. So let's talk about a couple of things before I dive right into the currency market. So First of all, I have to say that, the NASDAQ 100 is heavy and it continues to trade heavy. And I expect it to trade lower. I mean, obviously it's bouncing today as the world is now noticing that, tech is underperforming. There's a chart. This is a really interesting chart that I passed along in the chat room. Let me grab it really quick. If you were a little late, you might have missed this. This is actually, this chart's from Goldman, and what that basically is showing you is, back in the late 90s when you start to see the value stocks outperform growth. This is at the way you got to look at it is basically the .com boom. Same dynamic that we're feeling right now. I always believe tech is where you want to be, but there are certain times that you don't want to be in tech, and that would be right now. And that's why you're seeing the outperformance of the Dow, the DAX, the German DAX. We were just talking about that in the chat room as well, and the underperformance of technology. And you're going to continue to see that. So let me explain it to you best this way. There's a couple ways to trade it. You can trade oops, let me turn off CNBC. Sorry. You can pairs trade the market, like short NASDAQ, long Dow. That's the way you can trade it. So this way, when the market bounces, you tend to benefit more from the Dow moving higher. When the market moves down, you tend to benefit more from the NASDAQ moving lower. You can do that. Or, if the market rallies as a whole, you sell NASDAQ into rallies. And if the market dips enough to where you're like, okay, I think it's going to bounce, then you buy the Dow or the DAX, something like that. But that's the way you should be playing the markets probably for the foreseeable future. My assumption is the NASDAQ is actually going to trade heavier going into this next year as people start looking for value over growth. And, at some point, the NASDAQ is going to be a screaming buy, whether it's, at 10,000 in the NASDAQ 100 or closer to 8,000 or, 11,000, who knows? But I think that NASDAQ will continue to underperform. Today, though, because Simon's like, well, make up your mind in the chat room. And I'm like, well, today I think the Dow's actually a good short because everybody's talking about it. Everybody's talking about this dynamic now. So yeah, the Dow's probably a good short today, especially, and then I'm going to go into the charts or into the currency pairs, especially given that we had a false breakout yesterday. Bull flag. It should complete the 127% extension, but my 2 cents is if we break back below here, then that was a false breakout. So you look for a move if we drop back below 31.6. If that happens, then that's a false breakout from yesterday. Okay. And by the way, that's entirely possible, but just letting you know that's what I'm looking at. All right, so let's look at currencies. So the euro's getting a little bit of a bounce. I expect any move back to 119.50 to find sellers. Matter of fact, I'm trying to sell there if I can get it. So I'm going to actually set an alarm there because I think it's going to be great if we can get a move to 119.50. I think we're bearish right now. We're just working off oversold conditions. Here's your 4 hours. So support intraday, I don't see us breaking below 118.35. I just don't. I think that these lows are pretty good for now, for today. Okay. Cable. So the cable just hit this trend line here. So I think if we can break that trend line, we will move back towards 139.57 is a 38% retracement. So 139.60 basically. And now you guys know support is really critical. I mean, we went as low as 137.70 yesterday. But you know, the big kahuna, as far as I'm concerned, is 137.50. That's big time support. That's what's keeping us range bound for now. Aussie. Aussie's bearish. But let me zoom out really quick. Let me reset this chart. So let's grab this low from way over here, not the one here, way over here, back in November. Low to high. Okay. I missed this until yesterday afternoon. I was looking at it and I'm like, oh shoot, how did I miss that? Well, I did. It's, you know, I'll be the first one to admit to you guys, I'm not perfect. You know, I know a lot of people that you guys listen to pretend to be like all knowing, and look, I'm human just like anybody else. I've been trading for 25 years and I'm still trying to figure it out. I mean, you know, I'll spend the rest of my career trying to like figure it out, right? I learn something new every day. And my belief is in the markets, if you're not learning something new every day, then you're not doing something right. Okay. So yesterday I missed this. Raj says, you're not perfect, but almost there. Yeah, right. And then Chad said, that's it. I'm out of here. You missed it. Bye, Chad. Bye-bye. Bye-bye. Okay. Anyway, so no, I was looking at this and I'm like, oh crap, how did I miss this 38% retracement? I totally missed it. We hit a low of it. Now, here's the thing. I have to point this out. Okay. So that's obviously going to be key. Let's write that down. 76.15. I mean, we had all the time in the world too there. And I was like, how did I miss that one? So that is at 76.15, which is going to be really important. I do think we're bearish. Okay. Remember, I'm bearish because we're below this trend line. So let me just clarify that. Now that means we can bounce back to the underside of that trend line, which would take us to 77.70. I think if you get an opportunity to sell it at 77.70, you have to take it, right? Now, here's the thing. If you look at the sell-off here, we're holding the 24% retracement. Now, I think that we're going to go beyond that. I think we're going back to 77.70. But I have to point out that this is a very shallow retracement. In the event that we break through these lows, the Aussie is going to go a lot lower, like a lot lower. Like I'm talking, 74, 73 cent range. So it's just a very, very, very shallow retracement. I'm at this point. So just keep that in mind. Okay. Okay, we got the numbers written down. Here's the Kiwi. Another shallow retracement, but the Kiwi really critical support is 71 cents. That's I think we had that down yesterday too. I mean, but you can see how we paused there. So again, so I'm going to And it looked like we were wedging yesterday. I was like, oh crap, we're going to break it, but we didn't. So resistance now is going to be back at 72 cents, the breakdown point. The 38% retracement comes in at 72.40, but I really think we're going to struggle on any move back to 72 cents. And support is 71 cents, and that is now key. And I believe while we're below this trend line, we have to stay bearish. Okay. It's just like the Aussie. If you can get a rally like this, you got to sell into it, in my opinion. But we might not get that opportunity. You know, you think you get this opportunity, then all of a sudden, you know, everybody's waiting for the same thing. Okay, let's look at the dollar CAD. So the dollar CAD, you know, we were supported ahead of the 618. I mean, if you look at these dips, and I actually try to take a longer term view here. Like the dollar Canadian, yes, we're in this descending wedge. I actually believe that this might be happening. Like this, here's your shoulder here, right? I actually believe that might be happening. So it's going to be interesting to see if these dips continue to hold down here to 125.80, because that's the 618. Resistance intraday, I mean, I guess 127. So I think we wrote the same thing as yesterday. 127, 127.50. That's key. And we got to just keep it in range because, you know, let's face it, the dollar is just kind of, you know, pulling back a little bit today. Dollar Swiss, speaking of a pullback. So underside of the trend line, huge rejection of the underside of that trend line. We should come back down to 92 cents. Resistance should be, well, hold on. Let's figure this out really quick. Intraday support should be 92.60. Resistance is obviously 93.75. So 92.60. 93.75, and we're in a range. Oh, I take that back. We're bullish. Why is my printer going off? So you know, I have the master printer in my office, and my kid that uses it. He's on spring break right now. So why is my printer printing? Trying to print anyway. Okay. US dollar, Japanese yen. Let's go over that. You know what? I'm just making my way down. Dollar max. Let's try that. Dollar max. So we should have some support here. We were talking intraday how there's a little, you know, harmonic pattern here, but I would actually look for support to be closer to here. 2105. Okay. Dollar Mexican peso is bullish. And while we were trading above 2085, you know, you got to stay bullish here. Support. Hold on real quick. We got support. Resistance intraday will be 2140. Okay. Dollar yen. Dollar yen just came under some pressure. You know, I might actually close that really quick for, let me see what yields are doing really fast. It's like, I know I'm going counter trend here, so I like to take them off real quick when I can. See, I mean, yields might start bouncing here. All right. I just closed it for 45 pips. Okay. Yeah, I took that off just really quick. Okay, let's see. What are stocks doing real quick at the open? Dow's ripping. NASDAQ pushing higher. S&P pushing higher. Aussie pushing higher. Euro pushing higher. Pound is at new highs of the session. Okay. All right. Back to the analysis. So dollar yen 109.20, and that's major, right? And now support for the dollar yen probably be right here at the 108.20 level, right? If you guys don't recall, right here, that blue line, that was a breakout point, right? And you can see how we respected it. So that's going to be pretty big on the way back down, 108.20. That's bullish. And I'd rather be a buyer down there. I know I faded it and I sold a little bit and made a little bit of money. Nothing exciting, but what I'd rather do is I'd rather do this. Like this is such a big level of resistance and it's multi-year, right? So what I think is going to happen is it's going to need maybe once, maybe twice before it can break that. So we might have to do this, then challenge it again, then eventually break out. You know what I mean? It's like think of like a battering ram and the night ages, you know, like a battering ram trying to break down the castle or fortress gate. You know, it's going to take a couple of hits before it can break it. That's how I feel about this resistance. Okay, let's go to dollar index. So here's your dollar index. A little bit of selling coming in ahead of the 200-day moving average. This is the 161% extension. It's also going to be really big resistance here. That comes in at 92, roughly at 92.80. I mean, 92.80 is the 161% extension, but above that is the 200-day moving average. So that's going to be really, really key resistance. Hold on really quick. Sorry, it was, you know, what it is my the printer. My wife is actually trying to print something for a meeting that she has this morning, and so she never uses this printer, and she uses a Mac. So we're having a little bit. She's having a little bit of an issue printing things out. So anyway, yeah, I might have to put you guys on pause again as she does that. For her, it's a early morning meeting. that she's doing here. Okay, so support for the dollar index is going to be 91. So here's your hourly, and actually this is a bear flag. So if you look at this and it plays out, let's just think about this on an hourly basis, right? That plays out. That should take us right to the breakout point, which will be, let's just call it 91.60. That's going to be pretty big support for the dollar. You guys with me there? Okay. I don't want to say the dollar's bullish yet. I know we have to really start taking out like the 200-day moving average and all that stuff. Excuse me really fast. So I'm trying to do a couple of things here. Okay. Finishing up. Let me finish things up really quick, and then I'm gonna Steve or Stelios. You guys here? Maybe not. Okay.
We're
US dollar.
here, mate.
Hey,
At least I
Steve.
am. Sorry,
Okay,
I was muted.
cool.
I was speaking, but I was muted.
No problem. I'm going to finish this up, and I'm going to have you take over because my wife Lisa needs something with her. She's trying to print a document. She has a important meeting for her that she didn't have time. It's pretty early here, still 7 a.m. So she was going to do it from home. She's trying to print a document and she's having technical difficulties. So I'm going to finish this up really quick.
I know exactly what you mean.
8:45. It's like her office. She knows exactly how to, everything's all set up, but here, not so easy. This trend line here, the 618 is holding for the US dollar Norwegian krona for now. Support is going to be resistance, 860. Okay. It looks like the dollar is going to weaken a little bit here. So you can see it. And I think the euro is going to make its way up towards that 119.50. That's where you got to, if you guys are sellers, that's where you've got to be looking. Hey, remember what we were just talking about, guys? Just really quick. NASDAQ rallying today. Dow's coming down. All right. Here's a 15-minute chart just to give you a better idea. Dow's coming down. NASDAQ's coming up. Or it's rallying back. I'm telling you, it's that once everybody kind of sniffed out that dynamic where the NASDAQ's underperforming, today was going to be the day where you short the Dow, buy the NASDAQ. But anyway, that's just intraday. I think over time that what we were talking about is going to continue. Speaking of, since we're on the S&P, let's go over to the S&P. So here's the S&P. Resistance, if you guys don't recall from yesterday, we're in a triangle. So resistance here is going to be 3,900. And we're struggling to break above here, but I still think that we can. So 3,900, and then support is going to be back down here at 3,800. That's too far. Okay. I mean, it's hard to say. I have to write 3,800. I know doesn't give you guys much, but it's 3,900, and maybe in the event that we break lower, I don't think we're going too far. So maybe 38 and a quarter today. That might be stretching it. Okay. Let's go over to silver and gold and Bitcoin. So here is Bitcoin. Okay. So Bitcoin if you've been reading the analysis, you know, the underside of this trend line is being challenged, and we expected it, and that's right at this 55,000 level. 78% retracements, 55,300. So I'm going to write that down. Support, right, for today, support's going to be down here at 52,000. Hold on really quick. Let me see. Okay. Hold on 1 second, guys. Sorry. I got to just try to print this document really quick. Load PDF. Right. Hey, Steve.
Hey, mate.
Hey, I have a hard time talking and doing things at the same time. So let me print this really quick. Do you have anything you want to say to anybody real quick? And then I'll cover gold and silver.
I want to thank my mom. Okay, sure. I mean, I can grab it, and whenever you're ready.
No, I'm not ready yet. I'm just trying. Let me just print this document, and then I'll be ready. I just wanted you to say something.
Okay, not to grab the screen. Okay, got it.
Yeah, because people are like, they don't want to sit here and listen to nothing. I can't talk and it's like it should print now. It's not. It's
gold,
like
by the way.
Rubbing
gold, by the way, is
you're petting your head and rubbing your tummy at the same time. I can't do it. I just can't do it.
Yeah, I know what you mean, mate. I know what you mean.
All right,
I made it a lot easier for myself if you look at my head, right?
Oh yeah, because you're nice and bald.
Not exactly bald, if you see. I just, took a lot of it off.
Yes, you did. All right, so gold, we completed the AB.
Gold, quite a massive day higher today, yeah?
Yeah, we completed the bear flag pattern, and then now we're rounding to 17. Crap. I'm sorry. I've got to finish this up. Steve, you're gonna have to take over. I'm just gonna have to write this down.
Sure. Write the levels down. Yeah.
We're staying bearish well below there. I'm gonna do this real quick. 1678. That is now key. And then silver, kind of the same thing. Silver, by the way, we're challenging previous support, current resistance. That is the underside of this trend line. I know silver's having a nice day today, but I don't know if I'd be too excited about. While we're below 2610, you got to be a little careful. 2610. It's still bearish for now. It could flip back to range, but support would be 25.25 back at this 127% extension if we can get down there. But I actually, you know what? I'm gonna mark up this horizontal support here, which basically comes in roughly around $25 for now. If we get back down to $25, I'm sure we'll be pretty well supported. Okay, Steve, I'm gonna let you take over. I've got to try to help my wife here. Okay.
Absolutely, mate.
All right. See you guys. Thank you. I'll see you later. And sorry about that.
Bye, mate. So as we were saying,
I got the screenshot. Okay.
Okay, bro.
Thanks,
okay,
man.
Good. So give me a second. Boop. And here. Okay. So quite a nice reversal so far on the day in gold and silver. I focus more on gold due to the huge importance of the confluence of supports that we were testing. Yesterday we were intraday even attempting to break through it, but we didn't on a daily closing basis. So I think that's that's quite a significant event, especially if the daily candle closes more or less like that. At the same time, yesterday we did have a very bearish candle on crude at that significant confluence of resistances. So, in essence, you can look at it as two opposite events in two markets that are not like trading opposite to each other. Actually, let's overlap gold to crude. If you see, it's quite interesting because for a big period of time, they were very well correlated, and in essence, it makes sense. I mean, they're both denominated against the dollar, right? I mean, not the same extent of move, but gold moving higher while crude moving higher, gold exacerbating the move, and then crude and gold entering a corrective phase, right? But look at this big divergence, right? If we focus, I mean, they've gone completely opposite ways. I'm not sure for how long this can continue. In any case, crude reversed lower yesterday. Gold is attempting to reverse higher today. It's interesting. Now, having to do with natural gas, somebody was asking. I was expecting another leg lower in natural gas, and so far it has happened. But the closer we get to 250, the closer we get to support. So I would expect natural gas to find anywhere between here and 245. 245 also, like, it's the 50% fib, it's also the 200 daily moving average. I would expect that most likely natural gas will find support anywhere between here and 245. So the closer we get to 245, I think the more appealing the risk reward becomes for a move to the upside. Having to do with platinum, I mentioned that before. Monitoring this channel, I think we break above this channel, then we're going back to bullish mode. Palladium still consolidating in the long-term triangle, and copper looks a lot like platinum so far, right? Found support at the previous wedges trendline resistance. So far, the move lower seems to be corrective in form. So I think it's rather dangerous trying to fade this move despite the huge move higher, which hasn't really found any significant corrective move to alleviate like the longer term overbought conditions. But it is what it is. I mean, it seems to be a strong trend, and nobody says that it can't continue being one. Now, having to do with dollar's fate overall, I think in the short term, it all has to do with what happens to risk assets. So S&P follows the DAX by breaking higher through this formation, which technically speaking looks like a very, very compelling scenario, right? I think it's impossible for dollar to keep moving higher. So, quite an interesting bearish day so far in the dollar. We have a dark cloud forming on the daily chart. So, let's see how that's going to evolve. I mean, I've told you before that I consider this move to be corrective in the dollar higher. Yeah, my expectations were that it might extend, more than it so far has. But, when you are in an established trend, there is no guarantee of how strong or shallow retracements are going to be. So that's why I'm not betting any money in being long the dollar, because I don't want to trade counter trend. So it is what it is. Of course, it's too early. I mean, in any case, cable hasn't broken down. That's something to note, right? Hasn't broken down, I mean, from the trend. Euro USD did break down yesterday, but if it comes back within the channel, like within the next day, that might just be an overthrow, right? So I'm giving you the other, side of the same coin. I mean, the bullish case scenario for all these pairs against the dollar. The Aussie did find support at this previous triangle trend line support, right? the Kiwi did find support in this horizontal area. So, I mean, my expectations were that we would see a stronger reaction higher from the dollar, and it might still be the case. But a couple of days like what looks to be today, if the day continues like that, I will start feeling that we might have seen this corrective move unfold to its entirety, and we might need a lower low before we see an actual stronger rebound higher. So, I'm not saying that the dollar has topped for now, but I'm saying that, given the trend, we get a couple of days like today, I'm going to be very, very cautious, and I'm probably going to be, start suspecting that that was it. USD NOK, one of our favorite with Stelios. Where did I hide it? Here it is. So USD NOK, why I haven't closed any of my position? Because it's still in a rectangle, right? Look at this. I mean, this is purely so far a corrective consolidation. Just look at this. Didn't even, I mean, this is the pair that didn't even manage to produce a higher high. I mean, we had a higher high in January 28th than we had a few days ago. So, that was a divergence. Same deal with USD CAD. Look at USD CAD. USD CAD still unable to break through this descending channel trendline resistance. So, I'm still skeptical. We might see another leg higher from the dollar, but it has to start doing it like within this week. Otherwise, I think it's just headed lower once again, and we might need to wait longer to see a stronger reaction higher. So, to recap, the fact that the DAX has, broken higher, the fact that the S&P looks like it wants to do the same, the fact that the Dow Jones closed yesterday at all-time highs. Yes, the Nasdaq seems to be diverging, but still, I mean, this can be viewed as a corrective move lower. I'm assuming that it even channels, or it might more or less channel. Let's see. Right. So, you have to be careful. VIX also seem to be decompressing quite fast. We did produce a higher high, but the fact that we didn't manage to close above 30, makes me a little bit skeptical as well. Yeah. So to recap, that's what I think is happening here. The dollar rally is in danger of failing. Now, having to do with the question about nickel, I said the other day that, listen, nickel looks much, much weaker than any of the rest of them, and still remains to be the case. Look at this. Nickel produced today a lower low already. I said yesterday that this looked like a short-term consolidation. So I'm very, very cautious with nickel. I think that nickel is not done. So, I'm not doing any real research on nickel, so I don't know if there are any fundamental reasons for this move lower in nickel being much stronger than anything else. But I can tell you that from a technical perspective, it looks really bad and it looks incomplete. A lower low today might be completing a first move lower, but given its impulsive nature, I would still be looking to short any rebound, I would say, towards like 1270. So I think nickel is not to be bought for some time. I think you want to buy something against the dollar, or you want to buy a metal or whatever, look elsewhere. That's what I think. Hi Steve, do you think AMD pullback to 60 is realistic? To be honest, I haven't had a look at AMD for quite some time. I can tell you that it has overtaken. Yeah, that was my last outlook. You see how long it's been. I expected that this is a triangle that would break to new highs, and it did happen. We did break to new highs. And as usually, Triangles are terminal formations, right? So we got the new high, there it is, with a lot of divergence. Look at this. Right, there it is with a lot of divergence. And we're finally producing a corrective move lower. Do I believe it can go down to 60? Yes, I do. First area of support is exactly here. You can see why, right? But the next area of support is at 60. So do I think it can go to 60? Absolutely, yes. So let's delete all this. No, actually, let's not delete it because we can use this trend line. And we can use this trend line and extended. And then we can use this trend line and extended. I would say something like this is like the possible scenarios for AMD. We might find support here in rebound, but we can easily go all the way down. Let's also fib this. The question is from where? Probably the most proper thing to do is to fib it from there. Let's see. Nothing important from there. Okay, some confluence there. Yeah, so 73 first area of support. Next one is 59 to 60. So 58 to 60, the area 58 to 60. I think 58 to 60 is an appealing area to be buying it. I would agree with you. AMD, you know, I'm a tech guy. I've been following AMD. AMD has made an, you know, amazing progress during the past few years. It has dominated the CPU market having to do with performance, and that's why it has also started giving a run for its money to Intel. It has already dominated some of the segments of the market having to do with productivity, and it's about to take over Intel in gaming as well, in gaming CPUs and servers. So I would say the prospects for AMD are very good. Of course, as everything else in this market, it's been extremely overdone. But I would say a move lower from like 100 to 60 will make it appealing once again. Yeah, same here, Ingmar. I bought my first AMD 2 years ago, actually, 1.5 years ago, the 3950X. It's an amazing CPU, amazing. So now it's the new version is like the 5950. Yeah, it's new version that just came out is the 5950. So yeah, amazing CPU. And yes, it's the first time I switched from Intel in I can't even remember how many years. Yeah, probably since the 80s. I remember that I had built a secondary system with this. Most of you won't even remember a company like this existed. At some point, there was a third competitor in the CPU market, which was called Cyrix. So at some point in time, I had made a secondary system using a Cyrix CPU and Pentiums. That was when the first Pentium generation was out. But other than that, I've always used for my main systems Intel CPUs until 1.5 years ago. GME intraday. Yeah, intraday is not my specialty, but I have no problem having a look at it. So GME, you said. Oh my God. This stock is so ridiculous. You know, this, I don't know, mate. I really don't. This is pure casino. I can tell you two things. Okay, first of all, you can fib this, right? If you're looking for target. Second of all, I can tell you that 99.99% GM is never going back to 483. ever. That's what I think. So the question, if you're asking me if I had to trade this, is where do you sort it? If you really want to trade this. Now, I wouldn't want to trade it. Why? Because this is a wacko market. It's purely sentiment-driven market, right? I mean, has nothing to do with fundamentals, has nothing to do with anything of substance. It's purely flows at a penny stock, because it might be at 200 and approaching like 260 again, but it's in essence everything a penny stock is, right? I mean, it can be moved by very few flows, and it's as I said, it's sentiment moved market. So, in my opinion, if you really want to do something about it, if I had to trade it, what I would be doing probably would be buying some puts, and I would find it very hard for this market to go through the 61.8% fib again. So I would expect that this rebound higher is going to lead to another collapse lower. I have no idea what the catalyst is going to be, if even there's going to be a catalyst, but I would expect this to fail. Yeah, it acts like a flying saucer. Yeah. Somebody asked about EuroCAD. Yes, let's have a look at it. EuroCAD, here it is. Haven't had a look at it in quite some time. I can tell you though that it has punched through important support, right? You can see it here, and second important support. Let's also fib this, see where we are. Yeah, so next important area of support, like 149 to 149.50. As you see, the longer term picture has like an uptrend, right? But let me zoom in a little bit. So longer term, I wouldn't say it looks bearish, right? But short to medium term, until proven otherwise, it does, right? So next area of support 149 and change, and then 146.90. I think against 153, 153.50. It's it's bearish, especially the last 3 days. The move looks quite impulsive. So I think that rallies should be sold, but personally I wouldn't be looking to trade this market, to be frank with you. Yeah. Any more questions, anybody? VTV. What's that, mate? What's VTV? VTV. Huh. Okay. Value ETF. Okay. Yeah, that's why it looks quite a lot like the S&P. Listen, it can't really diverge much from what the S&P or the Nasdaq is doing, right? It's diverging a little bit now because there is a rotation to value. That's why you see this little divergence. You see the Nasdaq in a deep correction. You see the S&P at at a lower level than the highs. But as you see, VTV is at all-time highs. Why? Because it mimics quite a lot. I mean, it has a very, very high correlation, of course, with the S&P, which is a broad index. But due to this short-term rotation to more value stocks, let's say, it has a higher high. But don't expect it to do like significantly different things than the S&P is going to do. Keep that in mind, right? So for the time being, it's overperforming the Nasdaq decently. It's overperforming the S&P somewhat. It resembles more the Dow, right? But I don't have anything else to say. I mean, don't expect it to do something like significantly different. I mean, upside targets, obviously, since we are at all-time highs, the only way to figure out upside targets is by fib extending this, right? 134.27, like first fib extension of this corrective move we had last year with COVID. That's it. I mean, it clearly remains a bullish market. We are seeing momentum divergences, so at some point, as everything else, we'll have to finally produce a proper correction lower, right? So buying it here doesn't make much sense because there is no risk reward. But in general, after like a deep correction lower, probably the bullish trend will remain for all the reasons we've explained. So it should continue higher. Top 5 stock holdings are Apple, Microsoft, Amazon. Yeah. That's right. Facebook, Tesla, and represents 14.49% of Vanguard Group's stock portfolio. Okay, makes sense. Other than Tesla, the rest of the stocks are more considered value. That's why it mimics more, so it makes sense. Other than Tesla, as I said, Tesla is anything but a value stock. But in any case, as I said, it will not diverge significantly from the S&P at any given point. Can you look at CAD yen? Absolutely. SQQQ Pro Shares Ultra. Okay, since we're at stocks, let's have a look at that first. SQQQ. No idea what it is. Ultra Pro Short, and that's why it looks like that, parabolic, because it has a contango. Yeah, I can tell you one thing about this. You see it. This is a market that you need to be very, very cautious of being long because it has a big contango, right? It means that you're losing money by holding it long, right? So this is one of these markets that a lot of funds might be short all the time, and at some point people are going to blow up because at some point it's going to be creating spikes like that one because when the market was there, this is how it looked like, right? And then you get this, which, in the grand scheme of things, it doesn't look like a big move, but I mean, we went from 79 to 160 in a matter of 2 weeks. So you understand people that were short there, they got annihilated, right? Literally annihilated. But on the other hand, by being long at the wrong timing, when it just keeps drifting lower, which is going to do to eternity, because of what I told you, it's a market that rolls over and has contango. It's at the vast majority of the times you're going to be losing money, but if you time it right, you can make a lot of money being long if you time it right. So if you get long at the right timing and you hold it for a short period of time and you catch one of those spikes, you can make a lot of money. Yeah, SQQQ is good for being short in the long run, but as I said, if you get caught short when it has one of these massive spikes, you're going to get annihilated. So keep that in mind. CAD yen, yes. Here it is. So CAD yen, we had said in advance that a break above 82 is going to be very bullish. Now, the problem, if you didn't buy that 82, is that we're approaching this channel trend line resistance close to 87. So, risk reward is not there anymore, right? So, the closer we get to 87, the more dangerous it becomes being long. So, you bought the breakout from 82, that's great. Probably you should start taking some profits. You didn't, wait for seeing what happens at 87. I think we should get at least a temporary reaction lower. And then judging from the structure of that reaction, we can, decide what's happening from there. So 87, a key area of resistance. What is the picture in my shirt? Bugs Bunny. Can you look at DMTK, Dermtech? Sure. Ooh, nasty. Nasty. This looks like a parabolic market of some trash company that the bubble blew up. That's, what I think is happening here. I wouldn't be buying it. Let me make it very clear. I think any rebound, probably a short opportunity here. Yeah. I have no idea what this company is doing, but it looks to me like a, penny stock that went bananas at some point for some reason, and it's probably over and done. TMC, this looks so bad. The longer term chart looks so bad. And even the rebound, despite being decent in percentage terms, I mean, from 0.25 to like 0.76, like it's, tripling of the price, but that doesn't look impulsive to me. So, if you're looking to buy this, I'm not saying that it can't go further, but I'm saying that perhaps it has already run most of its course of this corrective move higher. RSI is even diverging since quite some time ago, right? I would be very, very careful. And it looks completely liquid to me as well, which would be a second reason for me to be very careful here. TSM, not TCM. Okay, sorry, my mistake then. So I have no idea what I was looking at. Okay, now, first of all, that was an inevitable move. That's what happens to parabolic moves, right? Because these type of angles are unsustainable. Now, the next question is this move lower over? Most likely not. Most likely not. I think not. I think it's very dangerous to assume that this move is over already. So I think lower. I think it needs to go decently lower before it can be an opportunity. Okay. CNDT. Definitely a break of the 2.5-year-old downtrend. That's definite. Now, having to do with how much can this extend? Let's see. I think it can extend further. This looks like a decent channel. But, in order for me to be really longer term bullish here, I would definitely need to see an acceleration above this channel to prove that the market has changed. So this is not a big correction to a massive downtrend, but a change of trend. Now, the easy buy in this instrument was this. I mean, this was a very easy buy. This. Textbook move that you should be buying. Huge gap higher on earnings. You see this? And following this huge gap higher, clearly a corrective move lower. So, if we had a look at this somewhere here, what I would have told you is that worst case scenario, we're going to fill the gap before we move higher. Worst case scenario. But many times these type of gaps go unfilled, as it happened in this case, right? So this breakout, I think, was a textbook buying opportunity. But right here, right now, not so far away from this channel. I mean, it can move higher definitely, but if you buy it here, where would you place your stop loss? Here. But to the channel we have less. I mean, the risk reward is going to be worse than 1-to-1. So even if you like it, I think even if I liked it, because I can only talk for myself, even if I liked it as a company fundamentally, I don't see the technical reason to buy it here. Okay, guys and girls, more tomorrow. So have a wonderful rest of the day. Bye-bye.